Hello everyone and welcome into this week's market update on the 3rd of August. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself if it's appropriate to you. Okay, so the XJO closed fairly flat today, down slightly. At this stage, we've broken back to the upside, guys, so we're starting to show signs of continuation of the trend once more. So we've come out of that sideways phase. We've been stuck there for a few months now, okay? So happy to finally see us out of that phase and moving higher. This does bring us into blue skies though, so really it's hard to determine where the next resistance level is for our market. They tend to like using the whole numbers, right? We've seen that in the past. So we're testing 75 now. I suspect over the coming weeks, coming into our reporting season, we'll probably run to maybe even 76, 77. Okay, so trend is up, showing signs of continuation. Chances of further upward movements is very, very high, unless some form of news comes out to derail this breakout. US markets are a little bit different in the short term, right? So they've had a little bit of a run up. They created their all-time high maybe a week and a bit ago. Since then, they've struggled to really edge higher. Usually when they break into all-time high, often they do continue just to edge higher and higher and higher. This time around, they've just gone into a very tight sideways range. So there's a bit of uncertainty there, okay? So it's either they're going to pull back into trend and go again, or they'll finally break an edge higher. It's really hard to tell at this point of time, right? It's just like one day up, one day down, one day up, one day down scenario for the US markets right now. They've had a ripper of a reporting season, but forward guidance is a bit questionable. Therefore, we're not seeing that really relate to strong movement. I think it's taking a bit more time for analysts to really come out and be confident in a view. So I think the US market will still creep higher on the back of this strong reporting season. I just think there'll be a bit more of a delayed reaction. We might be looking for a few other things to help them lead higher. But technically, look, the trend's up. The likelihood of upward breakout is high. It'll be just a question of when. We'll wait and just wait for the chart to tell us that. Okay, so we heard from the RBA today, basically no change. Okay, so many people were hoping that they were going to delay their bond tapering just because of what's happening in New South Wales, with the belief of a prolonged lockdown over there. Many are expecting this lockdown to go further than the 1 month that was announced. Look, at the end of the day, the RBA is still extremely accommodative at these levels. The small amount of bond tapering that they're going to do in September probably won't have that much of effect on things overall, in that they're not even using their full $5 billion at the moment in weekly purchases. So at the end of the day, I don't think it's anything huge there. What I did like to see was their talk around inflation. That real inflation is below 2% still. Everything I'm reading really from the RBA suggests no change in interest rates until at least 2024. If anything, they'll continue to monitor the bond purchasing over the next few years, and they'll adjust accordingly to what's happening. So if the economy gets worse, guess what? They're just going to buy more bonds if they need to, right? So the messaging is actually pretty good for markets. The RBA right now, the Fed, the central banks of the world, they're acting as a cushion, right? So every time the market tries to pull back, the central bank cushion kicks in, right? And what you're seeing is markets can't pull back too far, because at the end of the day, with the extreme accommodative stance of the central banks, people are seeing value in the equity market pretty quickly again on any small pullback, right? So we're still in a buy the dip market. I think that will continue until we start seeing some substantial changes to the central bank stance. Okay, so right now for me, I'm still bullish to sideways markets overall because of central banks and because of other stimulus starting to hit in. US reporting this quarter has been very strong. Over 88% of companies have bet on earnings expectations. The problem you've got where things are getting difficult is no one's willing to give strong guidance for the next quarter and the quarter after that. And the reason for that is COVID. You've got the Delta strand. You don't know about what lockdowns are going to do. it becomes a very difficult situation, right? So it's in an environment where it's very hard for analysts to estimate what's coming next. And that's what's really stopping, I think, the markets from jumping. I do think markets will continue higher though overall. It's just not going to happen in the same quick way as what we've seen in the last 6 to 8 months. I think you're going to be a lot more patient. It's going to be a lot more of a grind. Oz reporting's kicking off soon. We tend to run into our reporting. I think that would be the case this year. We're already starting to see that run happen. So, you know, some of the big names start really kicking in next week, guys. So keep an eye on your calendars, keep an eye on your trades. I don't mind going bullish some of these stocks going into the reporting, but I don't think I'd be holding many of my trades into the reporting, guys, because I think we're in a time of uncertainty where a good report could see a pullback, right? We saw that in the US markets, so just keep that in mind, okay? We could see a volatile period in front of us here as reporting really kicks in over the next few weeks. But as I said, coming into the reporting season is usually quite bullish, and that's what we're seeing right now. Look, the big thing in the US right now for me, putting aside the Fed, because we can put the Fed to the side for the second, is Biden's next round of stimulus. Whether you're looking at the full gambit of $3.5 trillion, whether you're looking at the $1 trillion, whether you're looking at just the infrastructure spending, which I think is like $500 billion, something around there. There's so many numbers being thrown around at the moment. At the end of the day, we don't know what we're going to get, right? But I think the general consensus is we're going to get something. And the more we get, the better, right? I don't think the market's where it is because people are expecting Biden's stimulus. I think we're going to jump further on this once we've got something a bit more substantial to put our hands on. Now, who knows? This could happen quickly. It could happen slowly. If they can vote it through quickly this week, you might get some traction, right? You might get the first infrastructure bill through. You might get the first $1 trillion through. It's hard to say, right? You get a different news story every day on this. Regardless, though, the House goes into a 1-month break. They will reopen towards the end of September. If things don't push through soon, then we're waiting for the end of September. And I'm okay with that. I want to see progress, though. As long as they continually make progress, as long as some physical stimulus is still on the table, the market's going to lap this up. You're going to find that the markets will keep moving up on the back of this type of news. So I think there's this one last hurrah here, guys. Okay, if Biden gets through this $3.5 trillion, it's going to be one last big hurrah over the next 6 months or so. But, you know, I think we're going to get to a point in the next 12 months, 24 months where all this stimulus is going to slow down. It's going to run out. Central banks are going to pull back. You know, and then the economy is going to have to stand on its own 2 feet, and that's going to be where things get interesting. Okay, but for now, we've got plenty of stimulus. We've got plenty of hopes of more stimulus coming from the US. Central banks aren't moving. I think equities are still very, very bullish in this environment for the time being. I think I've already covered off the Fed Reserve side of it, guys. Look, they made no changes in the last meeting. Economic data we saw last week was showing that the economy, although is growing, may not be overheating at a pace that most analysts were worried about. So I'm a believer that inflation isn't going to be high in the long term. I think it will pull back in below 2% by the end of the year. Okay, I think it's transitory. I can't see it lasting. Therefore, I actually don't think the Fed's going to taper this year. I think with Delta now, the Fed's not going to change their stance until next year sometime. And I don't think interest rates are going to be touched for quite a few years ahead of us, if they do at all, right? So I think interest rate changes in relation to monetary policy is dead. I think there will be a new form moving forward in bond buying and something else. I don't know. But one way or the other, I think the market's got nothing to worry about at this stage in regards to interest rates changing. Okay. All right. So look, with the Fed Reserve, we'll keep an eye on it. Every time they meet, let's just see what their language is like. We already saw the language shift a little bit after this Delta strand has kicked in, and we're seeing the daily cases kick up. We're already starting to see the language change around interest rates and bond tapering, right? It doesn't take long, okay? So with that, also with that data we saw last week, right? We definitely saw a change in language over the weekend. Okay, so really at the end of the day, there's not much else to say, guys. Nothing has changed for me. I'm still bullish overall. I think equities markets in the medium to short term are going to continue to kick up to sideways. Each move up is probably going to be met with lower momentum until we get to the point of something changing. And that something changing is what we've always got an eye on, and that would have to be in whether it be no more federal stimulus or no more monetary stimulus. That's the type of thing that I'm looking for, guys, because at the end of the day, that's what's propping all this up. All right. Okay, so that's enough from me. Thanks for listening in for this week. I'll see you all next week, and bye for now.